anything. Like we're still looking for 10, 15, 20 points in either direction out of it. So, but regardless, all right, we will get going. I will start with the kind of newsletter overview. So on the chart, we have our wonderful hourly chart with still running our yearly profile behind and our last week profile in the red and white. So a couple things. One, I do think that last week is best viewed as a double distribution and taking 4,200 as your kind of distribution pivot for above or below. I think it would be helpful and nice for you guys to start understanding that even though this structure isn't a single balance node, this was an area where we had established buyer and seller value with then a subsequent flip turning into seller value, which was buyer value. And if these areas are quite balanced to really split it into a double distribution, just kind of a note to look at and pay attention to moving forward. With kind of our levels, the level we traded into our highs today, this 4180 to 4190, is a pretty big pivot area in my opinion for the week. Talked about it quite a bit in the newsletter. This is the look back inside of last week's value, right? Previous week value low, we can see it here. As well as kind of the halfway point of our bottom node. The big thing as well is this 45-46 area where we established a buying node below with our low volume node. And we know that if we can look back into a previous high volume node, that there is a quite high probability to trade through the node to the midpoint and ultimately into the top tail, which is what we saw overnight in Globex as well as intraday, right? Supportive back into our node, edge stays supportive, buyer value is willing to move up, and we just oscillate the node. Now, with all that being said, this becomes important for the rest of the week for if we can hold basically 4180 or not. And this is the kind of neutral to bearish major pivot neutral to bullish major pivot as well as bearish. On the screen right now, I have the bullish pathing laid out. We'll go look at the other ones, but just want to work through kind of how I'm seeing these levels. So for bullish, you really want to see this edge become supportive, right? We take our node, we split it, we had buyer value. We want to see this move up into our top half of the node, which then establishes this area as our new buyer value. If that occurs and we're able to hold this as bids, we then just play our node formation once again, where we're looking into our double distribution edge. If we can accept in, we start kind of chunking up and looking for node oscillations, right? With our top kind of weekly target being a full oscillation. Weekly one time framing down ends over 4290. This was the aftermarket push off of Amazon earnings, I believe. Regardless, earning push, put in this high. This was also a past basing area. We had this marked as our selling area for last week, and I still would like you guys to have it marked for your selling area for this week. We do know seller value has indeed, has indeed dropped down. So once you get to 65, last week's POC, understand that any trades above here are prime for sellers to exploit weakness and want to look down. If we can trap sellers up in this area, you do have some squeeze potential, and structure above is quite decent and quite well plotted. You can go review past newsletters for that. But that's kind of your main look for sellers. Now, if we end up failing in this area or not being able to support into our higher node, if we get a look into our upper distribution, that's when I will kind of change my tune a little bit, and we'll look at the neutral really quick before bearish. So neutral, same idea, right? The principle here, though, is instead of really pushing and establishing value above, we will continue to base and oscillate and have our POC kind of in this pivot area that we've talked about, right? Where we'll get looks above outside of value, but buyers will not be able to establish value. We'll still say seller value. If we look below, same idea, where sellers can try into these node edges or below, but the main look will be if we can put in excess higher lows in those same pivots we talked about in the bullish, and we will talk about in the bearish, these downside pivots and structure. So if we get up, reject, you want to see a trade through 80, right? And then down back into our lows, 45 first, then we look lows, and we look into our node edge. If this gets bought back up, right, it will be pretty nice two-sided trading, but you should expect kind of a balanced node in this bottom distribution. If we end up bidding up and putting in a a balanced distribution in our upper node, I would consider this to be quite bullish because we're seeing buyer value substantially move up. With these excess highs and lows put in, this will be not a shift of value. Value will not move. And we'll just establish, which is what I'm looking for a neutral market. Bearish, very similar. This is kind of bear's last stand here where we traded into today. We want to see this pivot reject. You want to see 4080 no longer hold bid and go back to offer. Retrace our node. Same idea. Node trade should be quite familiar with that. Trade back through our pivot. Turn this buyer value into seller value, and then continue on the way down. Now below, just like last week in this area, this volume is quite old, right? Mid-late spring. This is even older down here. Last week, our node formation did match what we saw previously in terms of structure. Low volume node in the same area, right? Buying node, balance node, very similar. Continue to look for that if we do reject here and continue our bearish trend. I want to note that because new node formations, for example, like in this low volume node area, will be much more important than leaning on this previous structure. Initial tests, you can assume previous structure to hold since you're going to have kind of a mob mentality. Watching some of this structure as well as value was established here, but really focus on if we have any divergence via your new node formations. Our main look then bearish is to continue to one time frame down, turn past supportive edges into resistance, and continue our way down. For some of these downside, I think it's easier to if we go look at our weekly chart. Don't want to do that. So we can see here. Talked about this a little bit last week, but we spent 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks, so 2 months in this area before we got our breakout move, which was our summer and fall trading, right? And how many tests here? 1, 2, 3, 4, 5 initial rejections into this area. So once again, very important for higher time frame structure. If we go back and look, our target area is this 40.15 to 39.90 for our weekly low if we do get bearish. And where does that coincide with? Well, it is 15 through, 90, somewhere in there. So you can see just this edge, right? Where we look through the low volume node into our next structure below. That's kind of your market overview. I don't really have too much of a bias for this week personally. There's a lot of things that are screaming this could be the bottom. There's a lot of headline risk as well as economic risk that is saying this is not the bottom. And there is price action and structure telling me that this should be balance. So because of that, I am leaning more towards a balance and more towards a bullish start to the week. FOMC on Wednesday. But I'm not going in with any preconceived notions because this can easily sell down another 100 points no problem. This can also easily buy up another 100 points, no problem. So I would definitely try to keep biases out of your mind this week, and really just focus on what our volume and order flow looks like into some of our key structural areas off of the hourly chart. We understand 4200. We understand this kind of like 40 to 50 area, with our past basing as well, and then obviously our lows. Any questions? I will keep bullish pathing on until we reject either 80 or are unable to hold if we do put in a higher high here. No questions, no comments, no concerns. Did anyone kind of do their own newsletter this week and get similar results? All right, very eventful crowd this afternoon. We love that. I really think that people who are still somewhat struggling intraday, struggling at finding areas to trade, um, doing these type of exercises and actually doing your charts and seeing if what you're looking for is correct is going to be the biggest help for you for trading. This is why, like earlier today, this will be somewhat of a tangent, but like I know Gav kind of made a joke to Sigrid. He's like, just stream your DOM. And I'm a firm believer that you need to learn that for yourself. Like me helping you do that, you're not learning anything. But doing these exercises can confirm if you're on the right track in terms of like idea generation. Because if the ideas that you're generating personally are not correct, the market will tell you that quite quickly. So it's understanding like, do you see why this area is important? If yes, cool. If no, what am I missing? Right? Um, do you understand node structure plays? Do you understand the lookups, looks down? And that just translates directly into your intraday trading then. Same idea intraday, where I think there's a lot of times where people are just mindlessly staring at a screen without actively thinking about what they're looking for. And I cannot stress enough that like if you create a thesis and you watch it occur and it either proves itself correct or uncorrect, it does not matter if you're in that trade or not. Right? The more that we can build our pattern recognition and understand areas that are good, that will just give you confidence and strength for the next trade. But it requires you to be actively thinking and actively doing work and marking out your charts, finding areas, and understanding where to trade. Without doing that active thinking, it's just kind of pointless time spent, in my opinion. Um, and that's something that we're here to assist you with, right? We're giving you areas to look for. We're giving you specific levels to look for. We're giving our own commentary on the aggressiveness or lack thereof of participants in certain areas. But to really take full advantage of that, you must first understand what we're saying, which comes from practicing and doing it on your own. And then that can build upon your execution, where a level will make more sense and you'll understand what you're looking for. So those are kind of my last comments on that. Yeah, like every single day.